Good morning. "55 minutes to jolts if we actually get jolts." Canadian dollar softer amid weak risk appetite. Scotiabank. Euro soft and hitting fresh local lows around 1.15. Scotiabank.
The copper market keeps getting tighter. Pound weak, underperforming with pro-risk currencies. Scotiabank.
Sorry, I'm just wrapping something up, trying to make some tweaks for us. You can probably hear me typing. Gold prices slip a stronger dollar, Fed uncertainty way. Nigeria's tugger to Trump. State-backed religious persecution impossible under Constitution. You should be able to hear our squawk box in the background. Almost done. Well, isn't euro and pound, aren't they both weak? Or am I wrong on that?
Yen is outperforming on broader market tone, Scotiabank.
Well, if they're both weak, why would you be trading that pair? That part I don't understand. Yeah, but still, wouldn't you be better off selling something weak against something that is strong versus something that is weak and something that is less weak? All right, Aiden is struggling with a project, so I'll start in 1 minute because I can't find my cup of coffee. All right. We'll get going here. All right, so let me just find where we are, what we're doing. I got to find the page. Yep. Found the music. Let's start by killing that. Oh, I found the Atlanta Fed data. I guess I can pull that back up. All right, I found that stream. I need to find our chat. Where did that go? So many pages, huh? So many pages open. Where are we? Where are we? Is it over here? Yeah. Is it? No, that's Monday. US dollar, Canadian dollar technicals. US dollar, Canadian dollar stretches to new highs going back to April. Trying to find the live stream. Hang on. Where did it go? All right, well, I guess I have to log into YouTube proper. Sorry, I was ready. YouTube. Now I gotta go live. Then I gotta click on the live stream that's already live. Now I should be able to see the chat. There we go. It's the end of the world as we know it. All right. Here we go. I guess we're good now. Sorry about that little delay. Hey, I'm working hard making things pretty for you. I want to look pretty for you. So anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's go! All right, good to see you. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Yeah. Bahai says, Wayne said 1 or 2 years ago that Christmas rallies start from Halloween. No, that is not correct. I've never said that. Yeah. It's more like the last 2 or 3 weeks of December. Or maybe Thanksgiving, which is the end of November. So, like, for sure, not the end of October, but much closer to the end of November kind of period. Okay. Yeah. Yeah. The move that you are trading during a period like now is related to the general move from the third week of August, third week of September window till the end of the year. Along the way, you're going to have pullbacks. It doesn't matter how bullish the market is, you're going to have pullbacks. And I'll remind you that we've basically been farting around all-time highs. So that's kind of what a rally looks like. Just want to update you. Talked about it this morning at traders.com, but Atlanta Fed shows us at 4% GDP now. It's a big deal, especially if you're trying to figure out what the Fed is thinking. That's a lot of GDP for the U.S. Oh, show. Hang on. Site is in the middle of public. Switch. Lip. Go to market radar here. It's supposed to be loading. I noticed loading has been taking longer than normal. I'll come back to that. I'll finish this loading. So we have trade balance came out for Kenyatta. Next big thing is maybe Jolts, but I've just been so distracted doing other things. Is Jolts actually coming out? That's the Bureau of Labor Statistics, isn't it? Or does someone else do it? No. So yeah, I guess we're not going to get the number, right? We haven't had an update for a while. Uh, yeah, Jolts home. Well, November 4th is today. Says it's coming out at 10. But we know this number to be true. That's what we had last time. So 7.2, right? So if we go to fundamentals and we go to jobs, we have 7.2. So we have the latest data already inside of TRADARS. And we have some forward guidance here of maybe this goes back to 7.3. Not necessarily now, but in the near future. So the last reported number, though, is that 7.2. All right. So we get that data directly from the Bureau of Labor Statistics. Isn't that cool? So it comes out at 10 a.m. Is that where it's normally? Is it normally 10 a.m.? I guess so. I mean, so we'll get that number. That's good. So we'll get some numbers. Notice that we are in a declining trend in JOLTS numbers, and yet we're at a point in which stabilization of that trend is likely to happen. Mahai says, can you just show me what's strong be trading against euro? Yeah, that's your job. So you should be able to use your charts for that as an example. So I'm scanning pound right now because we did a live stream already at traders.com. And notice that you can see across the board, it looks like pound is weak. Great. You're supposed to be doing this on everything. So when I use like euro, the whole purpose of scanning all your euro pairs, now they're all in different layouts and time frames, so you have to clean that up. Maybe I can give you a more old school view, like they're all messy. But you should be able to go through and then just look and find out what seems to be strong versus Aussie and weak versus Aussie, and then you go through and do that with euro, and you do that with pound, and you do that with dollar, and you start to create a framework for what's actually happening today. Now that's what you should be doing. But if you want to cheat, you could just go here. Okay? I don't like the cheating process, but whatever. So you're right. This is a 15-minute chart. These are all 15-minute charts. So this is sort of like here and now. Yen is ripper strong, bro. Dollar's ripper strong. Swissie's ripper strong. And you were trading pound CAD, and like that doesn't make any sense. So there's that way. Now you haven't done the work, but these are baskets. This is a pound basket versus a these are all currency baskets or indices. I mean, they truly are. This is yen versus everything. So on that time frame, it's pretty straightforward. Okay. But like it takes me, what was that, 5 seconds to say, well, your euro pound's not that great of a trade. I don't even know why you're looking. Okay. But whatever. Whatever. That's why I'm here, right? Like I'm not bitching. But you need to be, you got to up your game a little bit. Nope. So anyway, so we're going to start getting some data, and in particular, this one's related to jobs, and the 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 board
XRP downtrend persists while
split.
Ripple expands digital asset custody.
Trump's disapproval rating is at the highest of either term. U.S. dollar, Canadian dollar technicals, U.S. dollar, Canadian. What I wanted to do, kind of forgot what I was doing. ADP. That's right. I wanted to know ADP. ADP, yeah, will be coming out. So it's helpful, right? You can also break like ISM services. You could look at the employment subcomponent. Well, yeah, you don't have to be embarrassed, but I guess there's no better learning experience than public shaming. Um, but yeah, the bottom line is I don't even know how you could start trade planning for the day if you don't know what's strong or weak. Like, isn't that the whole point? There's two pairs. There's two currencies. So euro versus pound, if they're both weak, that just doesn't make any sense. And that was my point. Like, and what most people do is they trade what they like. Oh, I like to trade euro pound, and I'm like, that has nothing to do with anything. No, that is on pause because of some work I'm doing with the St. Louis Fed in regards of teaching it, and they're providing some material and stuff. That's on hold until I get that material. I think I have another meeting with them again this week on that very subject, and I think that's Thursday. Okay, Betsy. So yeah, so ISM services and manufacturing employment subcomponents gives us a look at the employment market. ADP and JOLTS gives us a look at the employment market. And we have a split Fed where some are worried that inflation's not coming down, and others are worried that jobs are coming down. And that's the split. So, like, this is important when we're looking at this. That was the other reason I showed you the Fed Now GDP prediction, which comes from the Atlanta Fed. Now, it's a different methodology than regular GDP. But so I'm trying to show you this data because you should know that that's the split on the board. And that, let's say, half the board wants to cut interest rates and the other half of the board does not want to cut interest rates. And it's because they're worried about different things. And those are the two things they're worried about. Yeah. So Bostic, being from the Atlanta Fed, he's going to say, well, why would we cut interest rates if GDP is 4? 4. Why would you cut if inflation is at 3? Well, you would cut because you would be worried that the job market's crashing. Okay, well, that's a whole different kit and caboodle, and that's why we're looking at that data today, like Joel said. Mm-hmm. So over the next few days and few weeks, I'll be slowly rolling out some additional features on Traders 2.0. And let's see, this page is supposed to be uploaded. This, that. Hmm. Oh, yeah, it doesn't work there either. These calculations are wrong, but the price is right. And I got the COT. That's not exactly what I expected. I guess so. That's the biggest winner all the way down. Yeah, I guess that's it. Yeah, so I'm messing around with this page, and I got some better pages here. But as far as what's live now, you'll be able, this is where you can get the video. Let's see if that'll actually work. This is yesterday. Hey, we'll start at the top of the hour. Good. So now you got quick access to the YouTube video, and this is supposed to load. Let's see if I can get that working before ADP comes out. Market. The reason I'm showing you that is because there's a whole different page doing these calculations, which will come out. And so there's a whole new back engine that is analyzing market risk from all kinds of levels. So, like, if VIX is going up, okay, that's an increase in volatility. Or if VIX is going down, that's a decrease in volatility. And we can analyze whether that's good or bad. Like, is that risk on or risk off? We can look at flows into investment grade bonds, corporate bonds. Yeah, corporate bonds. We can analyze whether money is going in or out of high yield. We can look at the dollar. Is it strengthening or weakening? But we can look at way, 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 way deeper into the analysis. to give you this risk sentiment. Way more amazing. It's an old version. Look at that stuff. Still not. Still wrong. Percentage, but that's the right price. But anyway, so little things are happening, but the biggest thing is like when this starts, uh, it should present itself later, maybe even in the session. But you'll see that basically we have a very, very, very sophisticated risk gauge now. It's isolated. Forex. So here's another way, Mahai was focused on pairs that are not moving, trying to find pairs that are moving. Here's another means of using TRADARS where you can just burn through your charts. Like, okay, that's a maybe, right? What do you think about that? What do you think about that? What do you think about that? So you're on euro pound, but you missed Aussie yen? That kind of thing. Like, isn't this a better trade? Isn't this a better trade? And then you get here and you're like, it's all right. What the way to be using this is you should be kicking it off the moving average, kicking it off of the 1 hour, 4 hour implied low. Maybe you can take it up to 88. You see, like you could be doing that, but there's probably better things. Okay. You're trading euro pound, but why not pound dollar, euro dollar? Kiwi Swissy. We had that yesterday set to fall. They look at all these things seem to be better. Go all the way out to page 2. Here's our euro dollar. Yeah, mediocre. Dollar's definitely strong. Okay. And that's another thing you should be looking at. If the yens are ridiculously strong or weak, okay, you look at the yen and you look at the dollar. Okay. That's all I need. But when they're strong like this or weak, like, going in the opposite direction, I would never, how about this? It would never even occur to me to do a cross pair like you were looking at behind. Like euro pound, I just don't get it. Strong dollar, strong yen, like that's like 10 trades. Why would you do a cross pair because when I look at the yen, the dollar, and the Swiss, to me those are the three funding currencies that indicate risk on, risk off. Right now, they're all risk off. Okay, so that's what I would trade. Cross pairs are generally synthetic. Now, euro pound, okay, that makes sense. Like money actually goes from Europe to London and back, right? All the time. Okay. Aussie, Kiwi, same similar thing. But like Kiwi CAD, Euro CAD, generally those are synthetic. And what I mean is the strength and weakness is observable, but all you're doing is taking a basket of CAD is it generally strong or weak? Or a basket of pound, is it generally strong or weak? And then they're influencing each other, but nobody's actually making the trade. So you're kind of like going out on your own trading. Again, euro pound's a unique example, but you're trading something a little bit more synthetic than just everybody's trading dollar, everybody's trading yen. That's actually happening. And that impacts like how much, if you're buying yen today, how much pound yen are you selling versus how much euro yen are you selling? People are unwinding, for lack of a better word, their carry trade. It's risk off. And that's actually happening. And so when I see a market condition, like one of the major reasons I even developed this page is in this situation, I would never trade a cross pair. Like, you should look at this and you're like, well, why don't you just sell every yen pair? Like, what? Aussie yen down, euro yen down, CAD yen down, pound yen down, Kiwi yen down. But I would never look at euro pound. Why? And then you would do something similar with dollar. Aussie dollar down, pound dollar down, Kiwi dollar down. Like, I would never do a cross. But that's just how I trade. That's just how I trade. I'm really just trading, 90%, if not 95% of all my trades are simply risk on, risk off, which means I'm either buying yen or selling yen, buying dollar, selling dollar, buying Swissy, selling Swiss. And generally, they're usually the same. Generally, they're the same. I'm buying all three or I'm selling all. That tells me it's risk on, risk off. If it's mixed there, then I do relative strength exercise and maybe do cross. Okay. So that's the lesson I'm trying to share. Okay. It's a way to focus your energy. You should be looking at this, but not that. There's too many things going on, right? So you have to be focusing on the right thing. And that's another good use of this page, where you can just burn through a whole bunch of charts really fast and see what's up. And then you can really isolate further and say, oh, I think I've seen some yen strength. So why don't we pull some of that up? And maybe you should consider trading yen pairs today because of your observation. Isolate that. And okay, let's do this. Pound yen down. Kiwi yen down. CAD yen down. Euro yen down. Yeah, Dan the man, that's how you think about it. If you're risk off, you're deleveraging. And that means bulls have to pay off their leveraged loans. In this case, they used yen to leverage. Now they have to pay back those loans, so they're buying up yen to pay back the loans. Okay, great. But the bigger thing is, okay, that's risk on, risk off. And in a scenario like that, you would never think of a cross pair. You wouldn't even want to look at one because, like, well, why wouldn't you just trade that? Right? And that, and that, and that. That's more than enough. So one of the fabulous things, and this is what I was trying to show you, one of the fabulous things that I am building for you is a way to just show you the risk level of the market now. Let's see if it'll load. Yeah. So let me publish. There we go. All right. So we have moved. Now it's hard to see, so I'll change that color. But we are currently risk off. We've been risk on for a while. We've been losing the risk. And now, as of today, we've gone negative. Now, why or how did we get this number? I don't have that page public yet, but it's a lot of calculations. So in the past, we did 8 calculations on 3 different time frames. Now we're doing it short term, long term, and using probably 24 variables, if not more. And the interesting thing is they're not static variables like um like what inflation high bad, something like that, because that's what an algorithm does. If you know if GDP is negative, then give it a score of -1. But if GDP is positive, give it a score of +1. That's an algorithm. What TRADARS is really good at now is taking all of this data, putting it together in a multi-dimensional format, and then understand the dynamics in play, and then score it. So it's not an algorithm. There's actually thought. It's not an if-then statement. So anyways, right now, this is what risk has looked like over the last 30 days. Okay. Soon, I'll make available the full page so you can see all the breakdown, but it's a lot of data. It's a lot of data. But the bottom line is it is risk off right now. Not by much, but it was risk on, and so the absolute number is slightly bearish, but we were quite bullish just not long ago, right? A week ago, and things have changed dramatically. And we're starting to see. Cool. What do you think? I mean, what we want to see is a consistent trend up, right? For risk on. Okay. So Richard, on this page, that'd be one thing, but we'll have an entire risk. I might just make it a tab here, but I believe I haven't done it in a while, but I believe I know I've created a risk page, but I think I've created a risk tab. because there's so much data going into producing this number that sometimes you're like, well, I want to see how it's calculated, and I want you to know how it's calculated. And, you know, and so anyways, it's impressive. What do you think? It's pretty, isn't it? Cat is our biggest dog with fleas, and gold was still our biggest position at that time. I'm going to make this simplified. That's too big. We don't need that. All that. Yeah, well, this is just the score and the trend in the score. So that's what we lacked last time, right, Jim? With TRADARS 1.0, we had great risk gauges, but you had to remember what it said yesterday and the day before. And I realized that was a weakness. So in completely redesigning uh, the risk gauge in general, I'm like, well, we need to see the trend, and this is the trend. That's what's happened over the last 30 days. But what you currently can't see is how we get the aggregate score. But you can see that like stuff's happening, and it's just pretty enough, don't you think? And part of your routine, excuse me, maybe to log in the squawk, catch up on the headlines.
Euro. Pound price forecast. Pound weakens ahead of Bank of England decision. Holds.
Right? Catch up on the headlines, catch up on the calendar. Oh, 3 minutes to jolts. Okay, all that kind of stuff. Say hi to your buddies, great, and then zip over here, and you can watch the most recent YouTube video and get a risk gauge. And this is supposed to be displaying the things that are moving most right now. So the prices are right, but it's not doing the calculations. That obviously Bitcoin's not up 11%. That's right, Richard. Yeah. So you can say, okay, so we're a little bit risk off, and this will show you the things that are moving relative to that. Okay, and it's just part of your routine, right? If you like scalping, these are the events you should be scalping. 2 minutes and 30 seconds to jolts. Okay, and you can break it down. If jolts goes up, so we thought there was a probability of up. So, right, here's your trade plan. Okay. So if actual is high, 66.7% chance the 2-hour trend will be down. Okay. Okay, so you can get ready for the scalp there, but you have scalping here, change it to 70% chance of success. Good, you got all of that. You should also burn through the charts like I did here. Just give you an eyeball. So you can go through 20 charts on TRADARS way faster than you can go through 20 charts on your trading platform like your MP4. So I'm trying to build in a routine. Okay, hopefully that makes sense. We had I think, a browser update, but lots of people had browser issues this morning trying to get logged in. And then once you got logged in, our webinar hosting company was having trouble authenticating with us. It's strange. It just, I don't think it was us, but nonetheless, you know, if it is on our side, we'll get all that fixed. I got a lot of things to do. In fact, I'm going to build a whole new webinar system, and I might actually start that today. 10 seconds till jolts. Consensus is 7.2. Wouldn't it be cool if it was 7.3? If it's below 7, if it's 6.9, it's going to be a market mover because we've calculated the standard deviation. And the lowest expected low would be 7. So 6.9 would be redonkulous. Wait for it. We're still waiting. Still don't have the number. So again, one of the things we do is calculate our projections for this number, which shows 7.3 is possible in the next month or two. But we calculate the standard deviation, and 7.0, 7 million jobs is the extreme low. So if we got 6.9, that means the employment market's crashing. The Fed will need to slash and burn. So I still don't have a number here. Do you guys have a number? I don't know why it's taking so long. I mean, unless BLS told us they were going to release it. So I guess it's just the government workers are slow. There's not enough workers. No, but we were on the Bureau of Labor Statistics and it said it was going to come out. But maybe not. But there it is right there. Jolts for September 25th are scheduled to be released November. So they've admitted that there's no real October, right? Yeah, so maybe it's dead. Maybe it just ain't gonna happen. Well, it's cool that we got a live calendar, live news, live chat, live pattern recognition. And that's all of this is in our free membership. This is in our free membership. Now, you won't be able to get the well, I think this requires Datamax. Aha. Yeah. So you'll have to have Datamax or higher to get this. And then, of course, if you have Datamax, it'll take you to the page that calculates the score, quantifies the score. So that'll be partially available. This is on the free membership. This is on the free membership. You're like, Wayne, I like to trade individual stock. Well, you can scalp those too. Visa, Intel, Pfizer, Microsoft, Amazon, Alibaba. This is on the free. Isn't that cool? Well, I guess that news ain't coming out. Yeah, look, it's been removed, so it's officially not reported. Yeah. Okay, so now it's been removed. So that's that. That's our date. I will see you at 4 o'clock if you're part of traders.com, if you're a paid subscriber. Okay. But every single one of you should be a member of traders.com. I am tweaking, I updated over the weekend our login/security system, and I think it needs a slap on the Botox this morning, but that's probably already been done. So if you try and it glitches, that's okay. We're getting it all ironed out. So peace on earth, may the pips be with you, may your profits be above average.